I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology. In Carolina, post-Fed rally for the NASDAQ 100, progress in the battle on inflation, warning on rates, and we haven't even got to earnings yet.
Macro and the micro is super important for certain names too, Ed. Let's talk about it. Meta surging after earnings relief. Plans to buy back shares, the company focusing on efficiency. We'll dig into the short-term cost cuts and the long-term goals as it also wins court approval to buy VR startup Within.
Plus, my exclusive conversation with Palantir CEO Alex Karp, who has some pointed words for shareholders and potential new hires.
And crypto hackers stole more money than ever before in 2022. That's as Cathie Wood's ARK doubles down on its $1 million target for Bitcoin. First, let's check in on those markets. I'll get to crypto in a moment. Let's stick to the NASDAQ. Ed, you were just calling it. What a rally we saw for tech stocks, particularly outperforming the relief from the Federal Reserve. We seem to be interpreting it as a dialing back in all those rate hikes. So stocks, they surge up 2% higher since September 2022. All country world index up 0.9%, even as Europe actually was pretty cautious ahead of the Fed, the ECB, the BOE. We look, of course, that Chinese tech stocks did pretty well in the morning's trading. And two-year yields, borrowing costs coming down significantly as we anticipate that the terminal rate, eventually where we'll get with the Fed, is slightly lower. Let's kick it on as inflationary pressure and anxiety dials down. Money goes into the inflation hedge. It's not. It's a risk asset. Let's look at what's happening with Bitcoin, climbing and surging up more than 4% over the last couple of days, Ed.
Yeah, and there was so much action pre-Fed as well. Go straight to Peloton and in its earnings, narrowing loss, improving cash flow, and CEO Barry McCarthy saying the company's back from the brink of extinction. I bring this chart up because look at how sustained the momentum was in the stock, up 26.5%, biggest jump on record. How quickly has that story, that turnaround been at Peloton? We'll dig into later in the show. Let's get to the big one. Meta, the shares absolutely surging, and after hours, a bullish forecast for the first quarter, which we'll get into the numbers in a moment, but also boosting share buybacks to $40 billion. How much is this a company buying its own dip? I think that's a question that we need to ask, but also when the call hits, how healthy is the advertising market? Because you look at Alphabet, the parent company of Google, its shares also jumping in after hours. They have earnings in 24 hours time. Is this a feel good going into that because things are getting better for the ad space? I want to go straight to our Bloomberg reporter, Alex Barinka, who has all the key takeaways from Meta's earnings. Alex, what were the top lines?
I mean, the biggest thing here with this 18% stock bump, I think, is going to be the cost cutting. Meta has had some kind of shaky ground with investors over the last 12 months because of how much they say they're spending on things like this far-flung vision of the virtual reality metaverse. Well, they have come back to earth, it seems, and actually lowered their expectations for 2023 for their costs to about $89 to $95 billion in expenses for the year. I think the icing on the cake on that that's probably exciting investors is the addition of $40 billion to their share repurchase plan. Again, Meta stock sold off the most ever, the most for a year ever in 2022. It's recovered a little bit, certainly more today, but adding a little bit to that buyback has certainly got folks excited. Now, in terms of the broader market and what we might also see from Alphabet tomorrow, I'm looking at the top line estimates for the first quarter. For revenue, they're projecting $26 to $28.5 billion. That basically straddles the average analyst expectation. So I think there might be some clues under the hood here that the general malaise in the ad market is leveling off, similar to what we heard from Snap yesterday. But as the earnings call gets started here, I'm sure that there'll be questions on both cost, metaverse aspirations, and where that revenue stabilization is coming from.
And I'm sure competition with a company that you focus a lot in on, which is TikTok. So it is notable that we're getting that push up in the shares, but we're still half of where we are in the value of Meta stock from this time last year. Anything in terms of where their market share is looking, or their own cannibalization with the fact that they're, discounting, giving cheap ads on Reels, for example?
Exactly. That Reels narrative is one that was really big last earnings cycle, and I'm sure they'll get questions now. Reels is their answer to TikTok. It's short form videos that's served up to you based on an algorithm. It's really sticky, and users are liking it, and they've shown some kind of strides in getting users on board and spending more time there. The problem is it doesn't make as much money for them as other places where they could serve ads on Facebook and Instagram. So last earnings cycle 3 months ago, they said this will be a 12 to 18 month process until they can close that gap. 100%, I'm sure folks are looking to get an answer on the progress on that front.
Hey, Alex, as you wrote in the Top Live blog, investors have been laser focused on spending, but the number that caught my eye is this 2 billion Facebook core platform user base, 70 million growth from the same time last year. How surprising is that?
It's a bit surprising. Remember, Facebook's been around for what, almost 2 decades now. So to see a rise of 70 million users and actually clear that benchmark of 2 billion people using Facebook every day is an interesting little number for a platform that's been around for a while. They've been making changes to Facebook. They've been bringing in things like Reels. It seems like they're listening to what users are liking from perhaps other platforms and bringing that into their legacy app. So I'm sure that they will be bragging about that. Mark Zuckerberg was in the statement in the release about that, and also about what he's calling 2023, which is the year of efficiency. So those two things definitely seem to be the top two that they are selling to investors as they let out these earnings today.
Alex Brinker, just the perfect summation of all that we've just got in the last hour or so. Let's get even more of a deep dive for you. Deborah Aho-Williamson is with us, principal analyst over at Insider Intelligence. And you were looking at the daily active users of Facebook as well and the engagement. It's interesting, both Snap and Facebook, well, Meta, the parent company, showing people are still coming to their platforms. They're adding eyeballs. But what about the actual revenues, about the ads that being bought?
Yeah, well, I mean, it is a good sign, just to say right straight out. It is a good sign that both daily active users and monthly active users for a platform like Facebook that is, quite old in social network terms is still gaining, right? So they're really, you have to take that as an important sign. That said, I'm pretty confident that the gains are mostly going to be outside of the core advertising markets, which would be the United States and Europe. And that is where Meta has been able to, for a long time now, generate a significant portion of revenue, be able to charge more for advertising, sophisticated advertisers. And so I think where you're seeing the dichotomy here is, and this is true for Snap as well, is that because the growth is in areas where there is, underdeveloped markets or, underdeveloped advertising businesses, that is impacting the overall revenue picture for the company.
What's also to be put into perspective, which I know you highlight time and time again, I mean, this is an enormous amount of revenue this company's pulling in, 32 billion on a quarterly basis, more than 116 on an annual. But revenue's down, and it's been down for 3 straight quarters now.
Absolutely. And, if we pull back to look at the full year, as we expected, Meta closed the year with its first year-over-year decline in ad revenue. But the downturn was slightly less than we thought, about 1% versus our expected 2% decline. But, that's not actually a good sign when you think and pull back to 2021, which was a year when worldwide ad revenue grew nearly 37%. So we have seen a huge swing in the performance of this company, partially because of external factors like the worldwide economy, the changes that Apple made to its privacy that affect the effectiveness and the efficiency of the advertising. But also, I mean, it's true that I think when you think about where Mark Zuckerberg has been focusing his time and attention, it's been on the metaverse. And I think to some extent last year, he took his eye off of the ball of the fact that Facebook and Instagram are the 2 biggest worldwide social platforms, and there's still room to grow. And I think that was something that I think they're trying to rectify now going into 2023.
Well, he called 2023 the year of efficiency, which sounds very much like something shareholders have wanted to hear for some time. The other thing shareholders like to hear, Deborah, is buybacks and more of them. Meta boosting their buyback authorization by 40 billion. We're showing on the screen this chart. Is this just Meta buying its own dip?
Yes, so this is an area because Insider Intelligence focuses mostly on looking at revenue and usage metrics. I can't specifically comment on that, but I think anything, just bottom line, that Meta is doing to, to improve its profitability, to reduce expenses, to, to counteract this sort of revenue shortfall is going to be good for the company.
let's talk about revenue then and talk about this week in aggregate. You've had Snap, we have Meta now, we're showing the shares on the screen, we're up 18% still in after hours, and then we have Alphabet in 24 hours time. How much can you take from this that things are improving broadly in the advertising landscape as it relates to social media players?
It's really hard to tell. We've had two very different performances. Yeah. Snap yesterday, pretty unfortunate for the company. Meta today, a much more solid performance, but still, the revenue decline is something you shouldn't just kind of brush under the rug. It's very, very notable for this company. I think going into some of the other players, I mean, obviously Twitter is not reporting anymore publicly, but we've certainly seen lots of challenge for that company. When you look ahead to Google, Google had issues last quarter with YouTube. YouTube competes very closely with, Instagram when it comes to Reels, TikTok,
right.
Netflix. So these are all things that we're going to be paying a lot of attention to when we look at the broader social media landscape.
Deborah Aho-Williamson, thank you so much for joining us, Principal Analyst at Insider Intelligence. And the other story we can't get away from, OpenAI, introducing a $20 per month subscription for a premium version of ChatGPT. ChatGPT Plus will offer access to the chatbot even during peak times with faster responses to typed queries and early access to new features. OpenAI is eagerly trying to find viable business models to cover the high cost of running its products, including, of course, the billion dollar, I should say, deal with Microsoft. Now, coming up, Peloton's CEO says the company is no longer at the brink of extinction. You see the share reaction to their latest earnings report, a record jump this Wednesday. We'll bring you the reaction next. This is Bloomberg.
Shares of Peloton absolutely soaring as the company reported improved cash flow and a narrower net loss in the last quarter. CEO Barry McCarthy is saying the questions about the viability of the business, they've been put to bed. Have they? Joining us now, Shweta Kajuria, Director of Internet Equity Research over at Evercore. Shweta, are they put to bed? Is extinction behind us?
I think so. First of all, thanks for having me. I think the question is not about extinction anymore. I guess the question is whether this is going to be an epic comeback, which is what Barry said in his letter. I call it a very, very respectable comeback right now with the free cash flow that they posted, excluding some of the supplier-related costs. What is becoming increasingly clear is that this business is self-sustainable on a free cash flow basis, which is what their number one priority was. What remains unclear is how should we think about growth for this company?
You mentioned comeback. We asked our own audience if they felt that this was evidence of the Peloton comeback. These are the results, pretty overwhelming. No, not convinced. 66% of respondents. I guess, what is it that the consumer feels right now for Peloton? How do we assess the user base and the growth potential based on the bullish commentary from management?
There's certainly a very good following for those who own the device. The NPS score remains very high. The usage and engagement with the product remains very robust, and the retention rates are intrinsically very high for this business when we compare them to some of the other subscription-based businesses. What is unclear is how many more of these internet-connected home fitness equipment can they sell in the market? What is the actual growth rate? How fast is the industry growing? And can Peloton grow faster than the overall industry? Are we tapping out of the market opportunity? Or is this something that can grow in the double-digit growth rate? The jury's out on that. What is
Well, sorry to interrupt, but I was going to say the jury is out. As I look across the sell-side reaction, I guess the concern is we believe Barry McCarthy in the near term. We don't yet have any evidence of what the growth story is 2 or 3 years from now. That seems to be the skepticism out there.
That's exactly right. So what is in their control was cutting down costs, headcount reduction, variabilizing the cost from fixed cost to variable cost, as well as inventory management, better inventory demand management, and all that they have done, and it's in the past, and they've done a great job since Barry came on board. What is not in their control is really driving demand. How much of a balance will they need to do with marketing spend to drive this incremental demand and also maintain positive free cash flow and profitability? And what is unclear among those who are not very happy with Peloton is the recent shift in outsourcing their customer service. And so the experience that customers used to have is not the same in terms of expecting the customer service that they have been, as well as the delivery expectations of the equipment.
Yeah, got to build your own. Shweta, I'm interested, therefore, in what they now need to prioritize and execute on. Is it more important that these partnerships like Dick's Sporting Goods, Amazon, that they work out, or is it about self-investment, ensuring that they are updating the app as they need to, that they are improving customer service as they need to?
It will be a blend of both. It is very clear that customer service needs to be better than what it has been in the recent past. But increasingly important is the incremental user base that they will get. So the key growth drivers that they will benefit from are not only the distribution partners that you called out and increasing those to include more retailers, but also international markets. They launched Tread in Australia. They could expand into different countries as well as product category expansion. And what they call fitness as a service product, which is really their rental program, as well as certified pre-owned, which is if you own some Peloton, you want to sell that, and that drives. Essentially, they're trying to make it easy for an average customer to buy this relatively more expensive equipment.
Right, but they also have relied, of course, on promotions and holiday season sales. Thanks to Shweta Kajuria, Director of Internet Equity Research at Evercore. Now, coming up, some of my exclusive conversation with Palantir CEO Alex Karp. That is all to come next. A fascinating, combative conversation. This is Bloomberg. Palantir, the at times mysterious data analysis software firm, is making more commercial deals. It's a change of strategy for a company that's thrived in chaos, winning government and military contracts from the pandemic and war in Ukraine. I sat down for an exclusive interview with Palantir's CEO Alex Karp and asked him how investors should view him, his view on Silicon Valley and global tech's perspective on Palantir. Take a listen.
We are a company whose most important purpose is to power the West to even higher heights in the commercial and in the government context. And we've done this in anti-terror, in the context of the pandemic, in the context of war, in the context of data protection. And you really can't do that if you're going to also transfer those technologies indirectly or directly to your adversaries, and we've never done it.
You were talking on stage about how you're a public company and you have a responsibility to your shareholders, and at times in the last 20 years, shareholders have complained to you, like, why are you doing this? It's loss-making, or why are you not doing that? And we talked about your strategy. Investors haven't really cheered it if you purely go off the share price performance. What is your message to them today about the deals we announced and that?
So, we are a company that has a primary mission. The primary mission is to make the West stronger and better. That mission has secondarily led to 61% CAGR over 20 years, 35% CAGR in the US government. And the share price thing is, I think, a little bit of a red herring because all tech is down. I don't think our shares have been any more punished than anyone else's. So if you are an investor and you want to go long on transforming our country and our allies, you have a home at Palantir. I have never, ever, ever wavered from that statement. And if you don't want to invest in us because of that, you shouldn't. And if you're investing in us thinking I'm going to change, you're making a mistake. We lay our cards on the table. There is nothing besides transparency here. When we went to the Ukraine, I didn't ask them, can you pay us? I said, here's the product. If I had gone to Standard Investor, they'd be like, well, you can't do this until they pay you. When we started off in America on the pandemic and in Britain, we said, look, we can help. This is the primary mission of our company. And I think where I'm very aligned with investors is they're hearing the truth. I'm not saying, hey, we might change this policy. We might do crazy deals in adversarial countries. We might put the other missions ahead of our point. No, and by the way, I tell the most important investors that every day, Palantirians, and I tell our retail investors, whom I revere, that every time I go on TV, you know what you're buying when you buy Palantir.
In the spirit of transparency, you yourself have sold stock regularly since the lockup expiry in 2021.
In the fairness of full transparency, in the last year or so, I've only sold for tax reasons. There's been no financial sales.
I'm grateful to be here with you in Palo Alto. I'm surprised to be here with you in Palo Alto. You talked about monoculture in Silicon Valley. You moved the company to Colorado, and you've not come back often in the last 3 years.
Because Silicon Valley has obviously failed in its mission to produce technology that's useful and useful for the world and makes it a better place. And we were, I think, the first reasonably large company to leave. And now I'm very happy to come back and say, look, on occasion, our position is a position we're proud of, and be surrounded again by people who disagree with me.
There are many woke engineers, I think those are words you've used, that have lost their jobs recently at some tech giants. I know that you're looking at growth. Are you open to hiring those engineers?
Do not join Palantir if you are not willing to support the U.S. military and its allies. You can have, by the way, any political opinion you want, as long as that's not a question for you. If it is a question for you, Palantir is not your home.
Unapologetic, uncompromising. He knows where he stands. He is completely comfortable with Palantir's offering to government, to security services. And that was just a small glimpse of a man that many in Silicon Valley have shunned because he has shunned them.
Retail investors, how in on the name are they?
Yeah, it's interesting. Before we put the interview out, I tweeted, and the response was interesting. There was more engagement from what appeared to be retail investors than I expected. But there's such mystery around the company. Unless you're doing business with them, you don't really know what it is that they're doing because of their bespoke software offering and data analysis offering. So I think that's a really interesting point.
And maybe, talking to you, having these big events, talking about the public signing on of new companies. That is an era of transparency. We've got to go to Colorado too, Ed, because there's interesting things going on there. I mean, it's kind of where Techstars was born. We've got to get over there and see what else is being built.
Well, you heard him. He said Silicon Valley has failed. But today, to be fair to them, they have announced growth and their customers were here in the Bay Area. So that was the conversation. Now, coming up, how the Fed news today has impacted the tech sector. We've got to get to that top story.
Plus, a record amount of crypto was stolen by hackers in 2022. We're going to deep dive on, well, who's to blame there? It's getting geopolitical once more. From New York, from San Francisco, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and Ed, you're in San Francisco, and the tech sector really getting liftoff today, unsurprisingly, from the macro trends from the Fed.
Yeah, and I think I'm right in saying this is kind of the first big post-Fed rally since July. And I go straight to one chart, which is NASDAQ futures jump, 2-year yield goes down. It is a snapshot of the story, and we have one of the great Bloomberg minds joining us in a moment who can get into this. But my point's very simple. 25 basis point hike and a warning from Powell that while they're making progress on inflation, they still foresee hikes to come. So for the market, it's about when does the policy pivot come? But in the context of tech, you ask the question, higher rates discount the present value of future profits. And that is why we look so closely at the relationship between yields and the NASDAQ 100 or NASDAQ futures in this case. You talked about Bitcoin earlier, but let's just talk about risk assets. It was a pretty broad rally. I'm looking at the NASDAQ 100, but also more speculative corners of the market. So the ARK Innovation ETF and also the Goldman Sachs non-profitable tech index. In other words, these stocks that trade at extreme multiples, high multiples, some relief for them because they have also been the most downtrodden corners of the market through this hiking cycle, and now we start to look if there's some more positive future, and that includes Bitcoin, which, let's be honest, Caro, you and I both said it earlier, it's a risk asset.
Inflation hedge, not so much, not yet. Let's get into all of it. We're really pleased to say back 2 days in a row. Isabel Lee is with us. And really, you were bracing yourself for the technology reaction to this macro story. First, let's dig into the tech shares and the rally on upwards. This is because they've been the most beaten up of late?
Yes, and Ed had a great summary, making my job a lot easier, but a lot of tech shares really extended their gains, even hitting session highs. You have the likes of Meta, Amazon, Alphabet, all soaring north of 2% because, let's face it, they were pummeled last year. They don't really like rising interest rates because that's not good for them. That's not good for their projected profits. So now it's welcome news. They're happy. They celebrated it. They cheered it. As Ed mentioned, NASDAQ is up 2%, and it's probably just going to be the start for them. And today, of course, Meta, I'm sure you covered it also, post-market are trading well because of sales speed and rosy outlook. So maybe it's the start of a new regime, as some people have said.
Right. On a day like today, there's two places I go. Fed Go on the Bloomberg terminal, just to get a sense of where we sit with rates in this country. But then I go to Bitcoin, and you heard us talking about it. Bitcoin, the risk asset reaction. Is that a fair move by me to make?
It kind of is, because so Bitcoin for some reason dipped a little bit around 230 when Powell was starting to speak, but since then it soared 4%. Last I checked before I walked over here, it paired some of its gains, but still up by around 0.3%. So a lot of the people said that, you know, this is like Bitcoin is behaving like a tech share, so it's obviously rising as well. But I talked about this yesterday. Arcane Research said that it's going to be a bad month for Bitcoin because the Fed's path is still unclear. Like, yes, we got a downshift today, only 25 bips, but then are we going to pause? Are we going to pivot? So it still remains to be seen, but there are still some people who are very bullish on Bitcoin.
I mean, it's worth remembering that quite often the moves we see precisely after the Fed announcement and press conference are completely undone the next day. So we wait, we watch for tomorrow's price action. But longer term, the bulls are still very bullish about Bitcoin. I mean, we're going to sail past 23,000 according to one particular ETF queen.
Yes, so 23,000 is where we're at today, but according to the ETF queen named Cathie Wood, we're going to hit 1 million in the next decade, which is really just 7 years from now. And she cites several reasons, but then that's 4,200% higher from where we are today. And 1 million is the bull case, 1.48 to be exact. I don't want to get it wrong. Her bear case is 258,000 and her base case is 682. So regardless of whether it's the bull, the base, or the bear, it's just kind of hard to imagine how we will get there, especially if you look at where we are today. But this isn't the first time she said the 1 million target. She's been reiterating it in the past. She said this in November when Bitcoin was hovering 15,000. So if there's one thing I admire about Cathie Wood, it's how she sticks to her guns. I mean, a lot of people love her, a lot of people dislike her, but if anything, she's really a woman of conviction, I would say.
All right, Bloomberg's Isabel Lee, a very busy day for you and the cross-asset team, and we still have a bit of a cycle to go. Now, sticking with crypto, thieves stole a record 3.8 billion, yes, billion, worth of cryptocurrency in 2022. That according to Chainalysis Research. Nearly half of it was from North Korea alone. Bloomberg's Jeff Stone's been writing about this data in this report and joins us now. It's interesting because two stories, right? A terrible year for crypto markets in 2022, but also a very bad year for those that had cryptocurrencies stolen, essentially.
That's right. And also a bad year for the people who are stealing them in some ways, if you use that logic, Ed. This is a huge number. 1.7 billion of that 3.8 billion is stolen by North Korean hackers. We know it's the same group, according to the United States government, that previously breached Sony years ago. If a lot of your viewers will remember that, and tried to steal upwards of $1 billion from Bangladesh's central bank years ago, too. So this is a busy hacking group really focusing on the same area that a lot of investors are, too.
Why? Why are they doing it?
It pays. It helps them get around sanctions. You know, the United Nations and the U.S. obviously have come out very forcefully against North Korea over the past few generations. And cryptocurrency is harder to track. It is easier to hide. And most importantly, it's easy to steal. If you think back at the way that U.S. intelligence agencies would have assessed that North Korea was selling counterfeit cigarettes or using other means to get around sanctions, this is the latest iteration of that.
Hey, Jeff, we talked a lot about North Korea its role in this. What about the other side of the table? What is the US government, for example, doing to prevent theft like this?
The U.S. is scrambling to educate companies and investors and Americans about the risk involved here. This group has really bullied cybersecurity defenders for a really long time. So what the Treasury Department, for instance, is doing is releasing bulletins and advising crypto companies and crypto adjacent companies about the risk of hiring North Koreans who are posing as non-North Koreans in order to either gather intelligence or work on projects or steal information for Pyongyang.
Next, anything that can be made safer?
Protect your password, be smart about which services you're using, watch Bloomberg.
Well said. Love that, Jeff. A little bit of a tease. Bloomberg Jestone, it's a fascinating story, one of the most read on the terminal and indeed on .com. So thanks for coming on and talking all about it. Meanwhile, we've got so much more to delve into in terms of earnings. We've got the software maker Dynatrace topping estimates, boosting full-year earnings outlook. We're going to be speaking with the CEO, Rick McConnell. But also, Ed, we've got to dive into not only the share performance of Dynatrace, what's happening with Meta, right? We're still seeing it managing to outperform after hours. Are we getting any more in terms of the earnings call?
Yeah, it's interesting because, there's the sort of calmness from the CFO talking about ongoing weakness in finance, tech ads, inevitably questions around generative AI. But Zuckerberg focused on Reels and how they're going to monetize Reels efficiently. And all those conversations you and I are having about TikTok, the competition from Snap earlier this week, not really surprising that Reels has come up in the call early.
We're going to dig into also VR. Remember, big news earlier today, the fact that they seem to be getting that nod from the court that they can indeed buy within Unlimited, the key VR purchase. So we're going to delve into that part of Meta soon. Keep rest of all the earnings on news coming from Meta on T Live, the blog on Bloomberg, or stick with us here on Bloomberg TV. Back in a minute.
Now, shares of Dynatrace jumped after the company posted better than expected financial results, but crucially also guidance. Dynatrace provides software which helps companies monitor their computing systems and identify performance issues with a keen focus on AI solutions. AI, of course it is. Well, joining us now, Rick McConnell, CEO of Dynatrace. Biggest jump for the shares, I think, since March of 2020. And you give strong guidance, which in this market's important. For you, was this about pricing that you were able to win? Was it about advantage over competition in terms of what you're offering? Talk to us through what's driving that ability to give strong guidance.
Well, Ed, thanks so much for having me. It really is about the market for digital transformation overall, and then observability, our market, which is around a $50 billion space specifically. And if you put those two elements together, you have a huge array of customers that are moving their workloads to the cloud. And as that happens, they need software that delivers answers and intelligent automation. You talked about AI earlier, intelligent automation from data that enables them to have the broad-based situational awareness to run their software environments.
I'm curious about competition and whether you're kind of winning share or even displacing existing cloud platforms. We had Bill McDermott on the show the other day of ServiceNow. I know that ServiceNow has kind of been moving into this observability space. Talk to us about how you're faring in that regard.
Well, we're very synergistic with ServiceNow deployments. A good number of our customers would have ServiceNow deployed. They still need the observability expertise that we provide through our AI Ops platform to enable their environments to work perfectly, which is what we strive to do. And so that's what we typically see vis-a-vis ServiceNow. Generally, the biggest competitor that we have is do-it-yourself, DIY. And that is where customers today are using homegrown tools, open source, a variety of other solutions to create dashboards. A dashboard tells you red, yellow, green, is your software working? What it doesn't tell you is where the problem is and how to fix it. And again, that's what we can do at a very granular level within your IT ecosystem.
Let's talk about Davis. Let's talk about the AI power behind Dynatrace. And what's interesting is you go to the Meta earnings statement and they're talking about their prowess in AI. We're all talking about ChatGPT and OpenAI. How are you managing with talent at the moment, making sure that you've got the right people, they're secure, they're not suddenly being tempted away at great, enormous expense to other companies that all want in on artificial intelligence?
We do a lot of our R&D out of Austria, actually, Europe in general. This is where the company was founded. And while we have people all over the globe, that's really our hub for R&D. And it is a fabulous community of developers that we built over the course of well more than a decade to create the AI ops engine in Davis that you talked about, Caroline.
And talk to us a little bit about, you're also speaking very much to your investor base, it feels like. In the quotes in your press release, you're talking about investing thoughtfully, about managing a business prudently, about ensuring that you've got growth and profitability. Is that still very much what you need amid these macro headwinds? You have to keep talking about the bottom line and the profitability, the margins.
I think this is an environment, as you all report on almost daily at this point, probably daily, that growth at all costs is sort of done. The good news is we have always managed Dynatrace with a balance of top line and bottom line growth. And the result of that is we see mid-20s overall ARR growth and mid-20s profitability in terms of operating margin and high 20s in free cash flow. This is a model that investors want today because it shows the cash flow generation capabilities of the company.
And push us forward. Go deep tech for us. Right? Go into the artificial intelligence vision that you have right now, because you are, as you say, strategically investing. Where do you invest? How do you envision the next 5-10 years for Dynatrace?
A few areas of major investment. One is around automation, automation, automation. You can imagine how companies are doing IT operations and keeping their software working today. It's with an army of people sitting in front of a sea of glass, screens, looking at dashboards, trying to figure out, is it working? Is it not working? If it's not working, how to fix it. So automation is one of those areas of focus. Secondly, focusing on big data and big data analytics and doing that in real time with no re-indexing, no rehydration of data stores to make it fast, scalable, super performant. And thirdly is around application security, which is yet another area that benefits substantially from being integrated deeply into your observability platform. So those three areas are areas of keen focus from an R&D perspective.
Rick, I'm going to be a bit more direct with you and ask the same question Caroline did. I'm looking at how much cash you've got on your balance sheet, and you talk, and the commentary Caroline cited from your earnings statement. Are you going to hire people or do layoffs, and are you going to do M&A in 2023?
Not planning on any layoffs. The good news is, based on the model that we've got, Ed, we've been able to modulate the hiring to manage to that model. And so we feel very good about where we are, and we're continuing to grow headcount accordingly. In terms of other areas, organic, inorganic, we'll continue to expand the company as we see fit. In an M&A area, we can expand in that fashion as well, with smaller tech tuck-ins to accelerate roadmaps.
I am looking at analyst recommendations. You got 17 buys on this stock, 10 holds, not a single sell. But what's interesting is the price target. They all think the overall average consensus is $45.91. Now, I know you're going to say you don't look at a price target or you don't look at your share price, but you're at it. How do you convince investors, how do you convince those overall analysts that you can go higher in terms of your overall performance and market cap?
You're absolutely right, Caroline. I don't pay that much attention to the stock price because it's not something I can control. What I can control is the performance of the company, or what we try to control is the performance of the company. And this is where we had a very strong Q3, our fiscal Q3, that we just reported on today. And we're looking forward to continuing to convert that pipeline into Q4, and continuing to perform in the balanced way from top to bottom line management that we discussed earlier.
Rick, it's great to catch up with you. Thank you so much for your time. Rick McConnell,
Thanks
CEO, Dynatrace. It's been a long day. His earnings came out at 6:30 a.m. Eastern. Meanwhile, coming up, we've got to get back to Meta. And in fact, some more narrative coming out from Mark Zuckerberg himself, talking about cutting some layers of middle management. Now, we'd heard that reported before. They talk about the reduction in cost, the increase in efficiency. So we'll dig into all of that in a moment. Susan Lee, of course, the CFO, saying this is just the beginning overall in terms of fully scrutinizing our hiring needs. The shares up 18%. This is Bloomberg.
Impression growth was primarily driven by the Asia-Pacific and rest of world regions. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, lower advertiser demand, and foreign currency depreciation. While overall pricing remains under pressure from these factors, we have continued to make improvements to our ads targeting and measurement that we believe are driving more conversions and better returns for advertisers.
Susan Lee, the CFO of Meta, and it's notable that Mark Zuckerberg really trying to hit home on the point of efficiency again on the call. He's really talking about how they've entered a somewhat different phase, they say, of the company. They grew so quickly for the first 18 years of the company's growth. This is very hard to really crank on efficiency while you're growing that quickly.
Right.
Let's also, though, Ed, talk about where they are growing in the longer term, and it's towards a metaverse vision. It's towards perhaps, well, acquisitions in that field, and they got their first victory, didn't they? The Federal Trade Commission, a federal judge, has denied the FTC's request to block Meta's plan to buy virtual reality startup Within Unlimited. But the judge also did prevent Meta from closing that deal until the agency decides whether to appeal. Let's get to Leah Nyland, who joins us more from Washington. And really extraordinary, the fact that, well, Lina Khan getting pushback in this way. Many felt that perhaps this was really her trying to be aggressive, and it's denied.
Yes, that was a little bit surprising. The FTC can still appeal. They have until probably next week to decide that. The judge gave them a 1-week extension on blocking the deal until then and has called a hearing next Tuesday. So we'll have a little bit more then about whether they're going to keep pushing to block this deal or sort of let it through. But this was sort of the big first court loss for Lina Khan's FTC. You know, she came into her role saying that the agency needs to be much more aggressive, block a lot more mergers. They had filed a lawsuit against this one, and they also have the pending one against Microsoft Activision. So it'll be interesting to see whether this one has any impact on that one as well.
Leah, terrific reporting. Bloomberg sources telling us essentially about this sealed decision from the San Jose court. And as you characterize it, right, you can either see it as a win for Meta or a loss for Lina Khan. But there is an opportunity here to appeal. So what are the chances that that happens and that it is successful?
Well, there's actually a couple options for the FTC here. One thing that they could do is appeal to the Ninth Circuit Court of Appeals in California. This judge's ruling directly. And then the Ninth Circuit would rule on whether Meta could go forward with this deal or whether it remains blocked. The other option is the FTC could let Meta close this and then go into its administrative court. And then there would be a longer trial focused on the deal. And at the end of that, if the FTC wins, it could ask Meta to sell this off. That's not too unlike what they're doing now with Meta over the Instagram and WhatsApp deals. So they have a couple options for how they want to go forward. The third option, of course, would be sort of just to drop the lawsuit altogether and, you know, let Meta move forward with closing this deal next week.
Over to you, FTC. Leah Nyland, it's great reporting. Thank you so much for bringing us that. And let's dig in. I mean, many had questioned the overall focus of the name and change, the focus on 2030s when you eventually get profitability from these investments in reality labs, in acquisitions such as Within Ed. But for the here and the now, the investors are liking this focus in the near term on efficiency.
This is the year of efficiency, and that's it. The 2023 slogan for Meta is secured. First earnings report. It's absolutely brilliant. It's interesting because, of course, he's being asked about generative AI on the call, right? And he says, I'm equally as excited as everyone else, but not at the expense of efficiency. This is a very dull Mark Zuckerberg we've come into 2023 with, Caro.
I mean, learnt lessons. There were some investors pushing hard. They wanted to see a pullback in terms of capital spending. And look, maybe we will see more job cuts. There's talking about that middle management that still perhaps is under a lot of focus in terms of the effectiveness of having that. Really, Ed, this does look like a fascinating overall call as to, and I wonder if this share price reaction holds into tomorrow.
Yeah, we'll have to wait and see. You know, analysts' night's sleep on it. We'll see.
That does it for this edition of Bloomberg Technology, of course. Tons and tons and tons of tech earnings Thursday. We'll unpack it all.
And don't forget, a lot to wrap up on our podcast. Check it out, Spotify, iHeart, or an Apple podcast, wherever you get your podcasts. This is Bloomberg.